Hi there, traders. This is Brad Gibble with today's trading action. All right, coming at you a little bit earlier, just with an update. Because the markets are looking pretty good, right? We had the US CPI numbers that came in slightly, or like 0.1% lower than expected, and that's enough to really give us a nice sort of easy move, weaker dollar, equity markets rally. Basically, it just confirms, what we were waiting for after the US-China trade deal is just confirmation that the markets are actually back to normal. And I can seriously say they are, right? Right now, it looks really good. Plus, all the noise of the tariffs is out of the way as well. So, those US CPI numbers, this was the key number, right? The year on year, 0.1% lower than the forecast, sort of still within the range, but softer across the board. Even the core numbers there, month on month, were a little bit weaker there too. So we get that dollar weaker move, right? And we are starting to see a lot of things line up. Now, if I just come into the live trade signals, okay, so a lot of bullish signals. Now, yesterday I showed you the overall market analysis, right? There was an uncertainty across so many different instruments, and unfortunately, the majors, right? But they are now lining up. So when you come in to look at the pairs in play, you'll find Euro, Aussie's up, Euro's up, Sterling's up, Kiwi's up, and then you got a bunch of crosses there as well. Yen crosses, of course, Euro and Sterling sort of crosses. So we are looking at good market conditions at the moment, right? So when you come into today's trading, right, really sort of piece it together, where's the next opportunity going to come from? Now, if we just look at the charts, right, you're going to start to see a bit of flow here. I think all we need is one or two things to connect the dots. I'm just looking at the hourly charts here in the majors, like the dollar index is ready to go down. Like we're back at really good levels. Now, Sterling has already left the building. Aussie's already sort of just popped up, as has the Kiwi and dollar CAD, right? So we've got like just it just looks good. It's the first time in a while that I can sort of, put my hand on my heart and say, fellas, the markets look good. Now, the commodity currencies, right? CAD, Aussie, and Kiwi, all working in tandem. Now, the dollar CAD, it wasn't like a pure trade after the CPI numbers. We saw a little bit of a dip and then a decent rally, and then finally it went, right? Oil is rallying, dollar CAD now going lower. So the commodity currencies are in full swing, right? And that's what we're seeing like across the board, okay? And so I know some of the clocks have just reset. You can see the commodities here up. The oil trade is in play. Safe havens, pretty neutral at this stage. And at the moment, well, the major pairs have just reset on after 5 p.m. New York, but they are also looking particularly good, right? So if I just look at the live signals, right, there's a little bit of data in here. Look at the daily change here. Now, Aussie and Kiwi, top of the pops, right? These two are directly connected to the Chinese trade situation, right? Good turnout for good result for China, good result for Aussie and Kiwi. Now, on top of that, you've got Sterling, right? They've already got their little trade deal, right? Which wasn't much anyway. That looks, by the looks of it, the US and the UK don't do a lot of trade anyway. So that's up 1%. So you got things that are making complete sense and that we should be really focusing on. And then you're looking at something like the euro, right? It's the euro's turn to sort of just play second fiddle, right? It's following, right? These four pairs correlate at least 90% of the time. And if you dive a little bit deeper into those pairs, you get euro and sterling just because of their geographical location. They correlate 95% of the time, as does the Aussie and Kiwi. So you are seeing the major pairs light up, and that gives us a really good profile. So now I'm always looking to sort of work out how I can actually give you some better details of what's going on. And I'm going to get this automated. So the market sentiment, right? There's a couple of different things, right? Dollar index, okay, that's going down, right? We've got an on, a neutral, and off profile at the top. Risk is on. Safe havens, well, that's pretty neutral at the moment. Oil trade and commodities all are on at the moment, right? So the that's something to sort of keep an eye on as you go through the day. Currencies in the zone where you can sort of come back to the pairs in play here and actually sort of really isolate the best trading pairs. Now, just understand, right? Just before you sort of get super like pumped and jacked and want to get into this, right? Look at these four pairs here. Now, they have just had a nice, like, what, 12 hours of going up, right? So they are a little bit fatigued, right? It's all about timing. So at the moment, they are setting up a bit of a sell zone signal, but buy zone for euro on the long-term charts. So just go with the flow. Look for the markets to realign. And what it means is, now when we say wait for it to realign, like just give it a chance to sort of settle, right? Doesn't mean these things are going to come back down. So don't start thinking about selling, right? They're going up, right? We're looking to buy. But what we're looking for is stochastics just to sort of take a breather, drop off a bit, and then they go back up again, right? So doesn't mean they go down. I can't see these things going down just at the moment. And that's where you connect the dots with the upcoming data, because all we need is a couple of things to line up. So just looking at today's data here, right? There's not a lot coming on. The Aussie, right? This is in the spotlight at the moment. Wage price index. This is a decent number. It's an inflation number, right? So just keep an eye on what's going on here. 0.8 is the quarter on quarter, 3.2% year on year. And you've got your ranges there too. This is a reasonably important number for Australia, right? Especially with inflation. So just keep an eye on that. We've got some final inflation numbers out of Europe. You know what? They're not such a big deal, but you can keep an eye on those as you get going. And if I just sort of scroll down here through the calendar, that looks like pretty much it, right? I thought there's a bit more there, but there's not. This is one of those days in between where, you know what? We've already got direction. We're just going to wait for momentum to come back into the market and just focus on not much, right? This is good. This is like basically back to normal trading, and where you're not having, skyrocketing news events across the board, Trump, etc. Everyone's got their deals. Everyone's sort of sitting back at home, just watching their screens and letting them play out. Now, just on that, just keep an eye on the yen crosses, right? I'm going to be paying a particular attention to the yen crosses. It is the easiest trade out of all the major pairs. And what I'm talking about is potentially a break trade to the downside. Now, I'm not saying that dollar yen is going down, but this is the easiest trade, right? And when dollar yen or the yen starts to rally, we want to be on these pairs. But at the moment, with Aussie, Euro, Sterling, Kiwi going up, you got to expect the yen crosses to keep going up as well. And that's something to sort of, potentially consider there. All right, guys, that's it from me. It's like happy days. We got a nice trade on the Aussie yesterday with the CPI numbers. You know what? And the price action was sort of good in the sense that it went up, stalled, went back down, tested the level where it started, and then went again. And that's all you need to do. All right, guys, have a good one. All the best. Cheerio.